So today I will assess and compare the top consumer EV companies on the market to determine what is the best investment opportunity of 2022. In this video I will not be discussing Tesla because everybody is already aware of Tesla and they are the market leader. But who can challenge them? Which EV company will be best placed to gain a sizable share of the market going forward? Which EV companies are currently undervalued and which ones are overvalued? I will compare the pros and cons of each company to uncover the red flags and find the best value out there. Now let's get into it. The first on this list, due to its sheer size, is Nio. But is there far more to Nio than meets the eye? Nio is a pioneer in China's premium electric vehicle market. They design, manufacture and sell smart connected premium electric vehicles, driving innovations in next generation technologies, autonomous driving and artificial intelligence. Nio has been in production now for several years and is considered to not only be a growth company, but in an industry in its infancy, Nio is one of the most established players alongside Tesla. While most EV companies are not yet at production and delivery stage, Nio has no fewer than 5 cars already in production, starting with the EP9 supercar in 2016 up to the latest model in the Nio family, the ET7, with further additions expected next year. But Nio is much more than just a standard EV company. Nio has developed Nomi, which is one of the most advanced in-car AI assistants developed by a Chinese company. It is a voice-activated AI digital companion. They also have the Nio Formula E team, as well as Nio House, Nio Life, Nio Service and Nio Power, which is a mobile internet-based power solution with extensive networks for battery charging and battery swap facilities. It offers a power service system with chargeable, swappable and upgradable batteries to provide users with power services catering to all scenarios. As Nio continues to grow, so does the power of the brand and service. And as of just this week, there are now over 700 power swap units and nearly 500 power charger stations. Nio is expanding rapidly and looking to break into the European market with a current focus on Norway and Germany. And Nio are aiming to massively expand production in the first half of 2022. Recently, Nio announced a strategic partnership with Shell that includes a plan to install 100 battery swap stations in China by 2025 and construct and operate pilot stations in Europe starting next year. As a result, Shell's charging network in Europe will also become available to Nio users. Nio service and battery swap technology is what sets Nio apart from other EV companies, and Nio have already sold over 150,000 EVs over the past 12 months, ranking them second only to Tesla in the world. So what do analysts think of Nio? 9 analysts have set 12-month price targets for Nio in the last 3 months. The average price target is $60, with a high forecast of 87 and a low forecast of 45. This offers over 77% upside from the current price. And during the previous 2 years, the most heavily invested institutional investors include BlackRock and State Street, with institutional ownership currently about 29%. The second EV company on this list is Polestar. This is still a SPAC, with the merger expected to happen during Q1 2022. Gores Guggenheim have a long history for successful SPAC mergers, and Alec Gores has stated that they managed to get a great deal for investors with this merger. Polestar is a global pure-play, premium electric vehicle company based in Sweden with the mission to produce progressive electric performance cars designed and engineered without compromise. They say that they are a design-focused electric car brand, harnessing refined performance and cutting-edge technology. The company was originally founded in 1996 as a racing company and developed a partnership with Volvo before being acquired by the Volvo Group in 2015. They announced their Polestar 1 in 2017 and Polestar 2 in 2019. Also in 2019, Polestar opened a production facility and by 2020 were making their first sales. As of 2021, the company is operating in select countries across Europe and the United States and Canada, but are planning major expansion over the next 2 years across Europe, Asia and the Middle East. In terms of production and sales, the numbers for Polestar are quite low compared to Tesla and Nio, but they are still miles ahead of most EV companies when it comes to production and sales. Polestar have estimated their sales for this year so far to be about 29,000 units, but are continuing to deliver on market and retail expansion plans that underpin significant growth targets, where they are expected to be operating in 30 markets by the end of 2023 and are expecting to ramp up sales to 290,000 vehicles by the end of 2025, in which time they expect to have 3 more Polestar models on the market. With the Polestar GGPI merger not due to take place until early next year, there are no analyst price targets to look at. But looking at tip ranks, we can see that overall investor sentiment is very bullish, with the percentages of investor portfolios holding GGPI stock increasing nearly 200% in the past 30 days. And Polestar is backed by Hollywood actor Leonardo DiCaprio and Geely Holdings, who are the company that owns Volvo. So ramping up production should not be a problem at all for Polestar. And over the past year, over 60 institutional investors and hedge funds have held shares of Gores Guggenheim, with institutional ownership currently over 36%. Now the next company on this list is a very interesting opportunity. So if you've watched this much of the video and find any value in my video, can I ask you to smash that like button? It literally costs you nothing but helps me out so much. The next EV company is Fisker. Fisker is different than nearly every other EV company out there. Their entire business model is different and they have a very interesting history that I hope that they have learned from. In 2007, Henrik Fisker founded the first Fisker company. They produced the world's first production luxury plug-in hybrid electric vehicles in 2008 and first delivered in 2011. However, production was suspended in 2012 due to the bankruptcy of its battery supplier A123 Systems, which I have mentioned on the channel before. Fisker was relaunched in 2016 and went public onto the New York Stock Exchange through a merger with Spartan Energy Corp in October 2020. So who is Henry Fisker? He is an acclaimed designer who has designed several Aston Martin cars over the last decade. The V8 Vantage and the DB9 are both credited to him, and he has brought in other Aston Martin personnel too. Fisker is a pre-revenue startup, and what makes them interesting is what they call the asset-light business model. Fisker is bypassing large factory costs by doing contract manufacturing and bypassing the need to have a dealer network by doing direct sales. This makes them a very interesting investment. But there are pros and cons to this business model. On one hand, Fisker does not have to buy a factory, and on the other hand, they lose some margin because they're paying someone else to build the car. Fisker has just launched their first model, the Ocean SUV, which starts as low as $37,000 with production starting in 2022, which will be built by Magna International, which is a giant global auto industry supplier. With the second Fisker model due to be built by Foxconn at the production facility that Foxconn have recently purchased from Lordstown Motors. Fisker hopes to sell 250,000 units a year out of the US production and then expand into Europe if there is demand. With a share price of just over $17 and a market cap of only $5 billion, Fisker is the second smallest company on this list. But what do the analysts think about Fisker? Looking at tip ranks, 8 Wall Street analysts have set price targets for Fisker in the last 3 months. The average price target is $26, with a high forecast of 40 and a low forecast of 18, which represents 45% upside from the last price of $17.83. As I've said before, there are very high barriers to entry to the EV sector, and any startups need to have strong financials. Fisker currently have over $1.4 billion in cash and total assets of over $1.6 billion. Liabilities amount to $757 million, but this is largely made up of convertible notes, so this is a very strong balance sheet. And Fisker is backed by several large institutions with ownership of over 27%. Interestingly, Fisker is also heavily shorted with 27% of the float shorted, so there is the possibility here of a short squeeze opportunity too. The next company brand themselves as an all-American EV company. But are they really just that? Lucid Group is an American EV maker headquartered in California. Lucid was founded in 2007 and originally focused on building electric vehicle batteries and powertrains for other vehicle manufacturers. In February this year, Lucid confirms they were in talks with the SPAC Churchill Capital Group to bring the company public through a reverse merger which valued Lucid at $24 billion. Lucid is backed by several large investment funds, including the Public Investment Fund of the Kingdom of Saudi Arabia, who are registered as by far the largest shareholder, with a controlling interest of the company owning over 60% of the total shares. In terms of production, Lucid has its flagship manufacturing factory, AMP1 in Arizona. The factory was designed and implemented with a future-ready strategy in mind, and the current production capacity is 34,000 units, with production expected to increase. So far, Lucid produces just one car, the Lucid Air, and the very first sales of this EV have just begun in recent weeks, but the sales and reservation figures have been very promising. The Lucid Gravity project is well underway, and Lucid expects to have more EVs in production in the coming years. Lucid is very much the luxury car brand of this list, and their price reflects that. The Lucid Air is stunning to look at, and the Lucid Air range rating of 520 miles is unrivaled in the industry. No other competitor comes close. 520 miles beats the nearest competitor by over 100 miles. But this luxury and range does come at a price, with the Lucid Air starting at $77,000, but to get the 520 mile range, the top of the range model will set you back a cool $169,000 as per the company's website. Looking at tip ranks, we can see the 3 analysts have price targets for Lucid. The average price target represents 17% upside from the last price of $37.66. But this is skewed by Morgan Stanley's price target of only $16. Both Citigroup and Bank of America have issued price targets with closer to 90% upside at $57 and $60 respectively. Lucid are well financed, but this is needed. Looking at the balance sheet, Lucid have over $4.7 billion in cash and total assets of over $6 billion. They have liabilities of $1.2 billion, but this is largely made up of this warrant liability of $800 million. So overall, this is a fantastic balance sheet, but we must remember that this company is valued at over $60 billion, so this is expected, and this is needed when we look at their cash burn. For the 3 months ended September 2021, Lucid had total loss from operations of $497 million and a loss of just over $1 billion for the year so far. So with this cash burn, it is easy to see why they need so much cash and why in the past week they announced issuing a convertible senior note with a $1.75 billion valuation. Now there is a number of companies that do not make this list for various reasons. The main one of these is Tesla, due to its high price and the fact that this is a mature company, the market leader, and everybody already knows about them. Then we have Rivian, that recently IPO'd and has a market cap of close to $100 billion. Although I am sure that Rivian has a big role to play in the EV sector, I just feel that the current price is too high risk considering that they have no sales and there is too much hype around them at the moment. Although Rivian do have major backers that include Amazon, I just feel that there will be better opportunities in the near future to buy into Rivian stock. The next company on my list is very speculative, very high risk, but the price is still very low. SPI Energy. SPI is a global renewable energy holding company and provider of solar storage and electrical vehicle solutions for business, residential, government, logistics and utility customers and investors. They operate through a series of subsidiaries in the solar and EV industry. One of these is the EV brand Edison Future Motors, that recently debuted their next generation electric pickup truck, the EF1T, at the LA Auto Show and the LA Convention Center. The EF1T is developed in partnership with Icona and leading auto partners and is the first product in a line of advanced all-electric pickup trucks and last-mile delivery vans. So far, this EV is just a concept vehicle, so on this list, SPI is miles behind the rest. But I do like the look of this pickup truck, and this is very much an early stage company. This makes the list due to what they offer at a very low market cap and share price. When comparing SPI to other companies in the industry, in terms of valuation, their ratios stand up pretty well, although their information is dated. The most recent financials showed that SPI has cash of $38 million and total assets of $217 million. Total liabilities of $168 And in terms of revenue in 2020, they recorded 138 million in sales and a total loss of $6 million. The share price of SPI is only $4 and the current market cap is less than 100 million. There is one analyst price target of $12 that was set by Maxim Group, and this is nearly 3 times the current price. So now, getting to the end of the video. If you have watched all the way through, you are a true legend, and I would really appreciate if you could smash that like button and drop me a comment down below and let me know what you think is the best value in the EV sector right now. Each and every company on this list has its own unique features and advantages. In terms of who produces the best looking EV, that would probably go to Lucid Motors, who also offer the best range. But this does come at a very high price and not everybody is able to spend over $160,000 on their car. On the flip side of this, Fisker is trying to produce and sell EVs at a very low cost by keeping costs to a minimum. And in terms of design and quality, the Fisker Ocean looks really good too. I would expect nothing less from a man who's credited with designing luxury cars good enough for James Bond. I feel like that at the current price, this might just be the best value on this list, but it is still very early days and time will tell. Nio has everything. They are an established brand second only to Tesla. They have huge partnerships in place, such as the deal with Shell, and are rapidly expanding across the globe. At this price, Nio is certainly undervalued. But Nio becomes very risky due to being a Chinese company operating out of China. This brings with it various risks that can put off many investors. Although I do think that recent articles on the likes of Seeking Alpha have talked up the risk more than it actually is. Then in terms of valuation, I think the GGPI Polestar could be the best of the lot. They already are producing and selling cars. They have spread across the world over the past year and they have a plan in place to expand even more rapidly. Polestar do have a Chinese connection in the fact that they are largely owned by Geely Automotive, but they are a Swedish company and are planning future production to be in the US. Also, the Volvo connection means that production and expansion plans should not be a problem for this company at all. And the current valuation of little over $20 billion, it might just be the best of the lot. Anyways, thanks for watching the video. Leave me a comment and let me know what you think of each of these companies, and enjoy the rest of your weekend.